Can you believe your favorite semiconductor Intel has outperformed my main, Nvidia, and my side investment, AMD? If you invested $10,000 on Intel at the beginning of the year, you will be sitting at $17,000, where my main inside, you would be sitting at roughly $13,000. Now, in today's episode, I want to take a closer look at some recent updates impacting the overall stocks and my overall thoughts on the companies. Let's take a closer look in today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode.
All right. So first, we can see Intel has performed amazing today. The stock was up roughly 7%, sitting at nearly $36 with a market cap of $167 billion. This is crazy. I remember earlier this year, this was sitting at nearly $100 billion for pretty much most of the time. Now, what really happened today is there are reports that Intel is in early talks with AMD to manufacture chips for it in its foundry business, according to a report from Semaphore. Now, again, no confirmation here, but this is something that's going to be happening a lot with this company, with Intel, with the massive investments we're seeing, potential rumors. It's going to be a company that's going to be moving on rumors and potential wins in the future. Now, this is pretty impressive if true, because one of the biggest bearish cases for Intel's foundry business is you have a design business. It's going to be very hard for competitors to trust that your foundry business is not going to do anything sketchy or leak any form of information. Now, there's a lot of doors and security reasons why that's almost impossible to be able to be done. But regardless, the market still sees that as a threat. And if AMD is really looking at Intel for their foundry business, it could help eliminate that bearish case. So that's definitely something bullish in the overall market for Intel Foundry. Now, I do want to say a lot of these semiconductor companies have various different types of products, different products in different types of architectures like x86, like ARM, and within them, they have different types of chip designs as well. So it is very possible that AMD is just testing maybe some of their embedded systems that they might want to build on Intel business, but still kind of put their main core products on TSMC, right? I don't foresee AMD leaving TSMC anytime soon. Anytime we hear anything about TSMC's manufacturing, we hear they're pretty much magicians doing amazing magic with their manufacturing side. But with the current administration, you want to be on their good side. And maybe this is a way that AMD goes, look, I can't stop all my manufacturing at TSMC, but I do have some few products maybe in my embedded business that can go into this foundry side where if it fails, it's not the worst thing, but at least I get on the good grace or the good side of the current administration. Now that's how I see it. Maybe I'm thinking too hard in it, but again, I wouldn't put any fears behind TSMC on this news. And again, all these are just rumors. We haven't gotten any confirmation from AMD or Intel at the matter. Now, I want to take a closer look at some charts, right? All these charts we can see and find at fiscal.ai. Make sure to use fiscal.ai/Jose for all these charts. I use this platform on a daily basis as a long-term investor. And if you haven't used it or haven't signed up, I really recommend it. It's extremely cheap and I use it every single day. Now, I wanted to look at what the market was expecting for Intel in forms of revenue growth. And unfortunately, not much growth is expected for the next 4 to 5 quarters, right? September 25th of 2025, September of 2025 estimates are roughly $13.1 billion. Same time next year is roughly 13.8. So in about a year, you're only expected to grow roughly $700 million. Now it seems like the market has low expectations on Intel's revenue growth. And for the right reasons, right? The foundry business is not something we should expect any form of meaningful revenue anytime soon. They haven't really gotten any customers on 18A that will make a boost here. And unfortunately, in the consumer client side and the consumer server side, and the server side for CPUs have both been losing market share to AMD. So I can understand why analysts are not expecting much right now. Now, in forms of balance sheet, it's crazy that about 4 years ago, Intel almost had a 1-to-1 ratio of cash to debt and was positive in free cash flow. We can see that right here. Now, fast forward to now, it has roughly 2 times more debt than cash, and free cash flow is burning. Now, compared to where it was maybe in March and June of 2024, we have seen a improvement of debt and an improvement of free cash flow. Still negative and still leverage, but you've seen an improvement in the overall balance sheet. And in the past few months, we've seen massive investments from the government, from other players as well. And we have seen that Intel is doing special type of agreements and partnerships for their foundry sites to kind of help with a lot of the cash flow burning. And also Lee Bhutan has mentioned various ways that they are trying to improve the cash flow of Intel. Now, one of my favorite partnerships that after we talk or I want to talk about is Nvidia and Intel, right? We saw about that AMD rumor, but Nvidia and Intel is probably my favorite for Intel. For those that are not familiar, Intel and Nvidia enter a partnership where NVIDIA will actually buy a lot of custom x86 CPUs from Intel and integrate it into its AI infrastructure using NVLink, which is super crucial for AI infrastructures right now. Now, for personal computing, Intel will buy a lot of chiplets, GPU chiplets from NVIDIA, and create kind of an SoC that will power a range of PCs that demand integration of world-class CPUs and GPUs. Now, these are two products that AMD already has, but it isn't competitive. And when you have NVIDIA as a partner, I think that can go a long way. Outside of that, NVIDIA is also investing $5 billion in Intel at roughly $23.28. The investment is subject to customary closing conditions, including required regulatory approvals. Now, NVIDIA isn't the only investment that has happened for Intel in the past few month or so. On August 22nd, we saw the U.S. government announced roughly, I want to say close to $10 billion investment. On August 18th, we saw SoftBank somewhere around $2 to $3 billion. And for the company, unfortunately, all these have been new shares, which are diluting existing shareholders. Yet the market doesn't care, as we saw the stock was up nearly 67% in the past year to date. Now, all these investments either have no board representation, no special rights, no governance provisions. So it's more of just passive investments from a lot of these players. But all these players have some say somewhere, right? NVIDIA is the king of AI, and they have a say a lot in a lot of AI solutions. The US government, the current administration has a lot of say, especially with the recent trade battles is going with the current push of domestically building more chips in the United States. And then SoftBank owning companies like ARM and having a massive portfolio. All these have some form of say. So if there were any companies that could make a difference, I do believe these three can, World 2 and the US government. Now, one thing that is happening recently is we are seeing reports that the current administration wants Taiwan to make roughly 50% of its chips locally here in the United States. First, I would say it's probably impossible for those types of numbers to even come close anytime soon due to the manufacturing footprint needed for that. So Taiwan says that it will resist pressure. Now, one that could theoretically be a winner of this is Intel, obviously the biggest manufacturer here in the United States with a lot of potential and expansion. If they do have a great product, and at the end of the day, it's all about that. You can't just say, look, I'm not going to build that TSMC, I'm going to build it Intel. No, TSMC has amazing technology for them to be able to do, and that's why they're a market leader. But if Intel at one point is able to provide some decent solution, this could be a way for them to continue to grow that foundry business. Now, outside of recent news, the company has also been in some recent conferences, and they talk about long-term growth drivers. Now, I'll talk a little bit for the PC, for the server side as well, and also kind of their roadmap. But if you are enjoying the episode so far, make sure to hit the thumbs up and the subscribe button. This is the best place you're going to get any AI and semiconductor news. Now, in forms of long-term growth driver for the consumer side, Intel believes that the AI PC adoption is still very early, and most of it is expected to happen in the second half of 2026. So this slow but steady adoption could create a powerful multi-year growth trend. The other thing is the current upgrade cycle to Windows 11 is still is not as far as long as some other cycles at the same point in time. So this provides additional upgrade momentum for PC markets in the coming months. Now, in the server business, one of the things that's happening is more cores per CPU, and that continues to increase. And with that increasing, the average selling price per core is also increasing. So more cores and more cost per core is a great recipe for healthy revenue growth for the market over time. Obviously, you have to be winning market share, but Intel is somewhat hopeful that upcoming solutions are going to be form of a market competition and be able to stop a lot of the bleeding. Now, in forms of current roadmap for the consumer side, we have Arrow Lake and Lunar Lake right now for the desktop and notebook. Now, unfortunately, both of these are mainly outsourced by TSMC, so you are impacting profitability dramatically. On the bright side, Panther Lake is expected to have its first SKU by the end of 2025 and mainly in the first half of 2026. And this is going to be on Intel's 18A process, so it can help profitability dramatically. Now, Nova Lake for the desktop market is expected late 2026, again, mainly on 18A wafers, but this is bringing a lot of the manufacturing back internally, which can help grow their foundry business and, more importantly, improve margins for their design side. So if these do come, there's a way for revenue growth. But at least if we're looking at the numbers, most of these numbers are really expected to happen in 2026 and the second half of 2026. They also kind of gave us some recent announcements of the foundry business. 14A is on the evaluation phase. The key milestones and timeline between 2025 and 2027, this is the time to be winning foundry customers. 2028 and beyond is when you expect to see volume production ramp on 14A. Now, what does this tell me? This tells me that in the foundry revenue, very similar, is we don't expect any revenue anytime soon. It's more something much later. So any real changes in the financial sides for Intel, in my opinion, is not expected by the end of this year. Maybe we see some due to the consumer CPU and the server CPUs in mid or the second half of next year. So financials and fundamentals matter, but I do believe for the moment, Intel is going to be one of those stocks that moves more on news. Is there a new investor? We're going to drive the stock price up. Is there a new rumor? We're going to drive the stock price up. But eventually, fundamentals matter. Now, I've always said, even though I joke around with Intel, I've always said if they do successful in this turnaround, Intel is going to be a multi-bagger. This could be a trillion-dollar company in the future. I think right now you have eliminated a lot of the risk, but it still will take time to do it. As like I mentioned, financials will take time to hit the top and bottom line. Now you might say, Jose, why would you be talking about Intel here at $167 billion and not 100? I'm pretty much sharing my same thoughts. There's been no difference in my thoughts, but I would say if you do believe Intel is a trillion-dollar company, buying at $100 billion, you get a 10 bagger at $1 trillion. Buying at $167 billion, you're still over a 6, maybe 7 bagger, and you've eliminated a lot of the risk at the same time. All this will take time, but it kind of showcases that why even sometimes if you do have great opportunists, you believe there's a lot of opportunity for Intel, maybe you might want to wait it out and you can still be a massive, massive winner in the long term of things. So for me, I'm still not buying Intel. I do think the company looks a lot better than it did 6 months ago. And it's not just because of the price action. If the price was still $100 billion, would be one that I would be buying for sure. But having Nvidia, having the US government, and having Samsung as investors, in my opinion, paint a better picture and a better road for this company's success. Lee Bhutan is also doing great. So I'm not buying, but I can see the excitement. I hope you guys enjoyed today's episode. Take care, have a good day, and see you all next time.